Well, good evening, everyone. Welcome back to the channel. So, rumor has it Tesla stock keeps dropping a lot. So, we're going to look tonight at whether or not it's at a good buying point, and we're also going to look at TSLY and determine whether or not it might be at a good buying point. They're both certainly a lot lower than they've been in a long time. So, let's go ahead and we'll dive right into it, and we're going to look at actual numbers, not just the stock price, but we're going to go in and we're going to do fundamental analysis. We'll look at the balance sheets, the income statement, and the cash flow. Most importantly, the cash flow. So yeah, Tesla, not only Tesla, but the market as a whole, it was a rough one, certainly today. So, I mean, on the surface, you could look and say, okay, Tesla used to trade for like $300 or $400. Right now, it's at 185. Wouldn't that seem to be a decent buying point? But we need to delve a little further than that. I mean, we're not going to see it for where it was at like $20 or $40 like 6 years ago. I mean, I wish I bought in then. I mean, I think a lot of people probably regret not buying in then. But anyway, all right, let's look at the stock performance today, and then we will look at some balance sheets and some of the other statements. So, all right. As far as market update, we were way down in all of them today. That Russell 2000, that pesky Russell 2000 keeps getting further and further away from 2000, or so it seems. Okay, so I like how when we type in Tesla, the second thing that comes up is TSLY. That says a lot. So we were all the way down to 181.06 today, and the after hours were at a flat 180. PE ratio is still really high. So a lot of people that analyze the statements on this will tell you that it's still got a lot of room to drop. And I'm going to do my best to show you all what I see in the statements. So our peak in this cycle over the last 5 years, November of 21, we were at 381.59. So we've fallen a whole $200 from there. So it's only back up from here, right? Well, we're going to look at everything and see what we conclude based on that. Market cap, it's still a big company. I mean, over half a billion, or half a trillion, not billion, but 500 billion. So we missed earnings the last 2 quarters. So I want to say the last calculation I saw as far as actual fair market value based on the cash flows and stuff, like the true discounted cash flow analysis, would have it at 120 or something, or even less. So, but let's look at the financials, and I will go over what I see just on what's publicly available. So over the last 4 years, total revenues have kept increasing. If you look from 2020 to 2023, we 3x'd our total revenues. Cost of revenues also went up very significantly. You see this? So cost of revenue is almost, it has caught up certainly to total revenue. We had a much wider margin in 2022, it seems, than we did in 2023. Maybe some of that can be chalked up to inflation and whatnot. As far as gross profit, you see the margin was lower because of the costs catching up to the revenue. Expenses, income, and then you see here we got some tax provisions. This hit hard in 23. Net income, common stockholders here, diluted net income available to common stockholders, and then we've got these items. We've got EBIT, EBITDA, reconciled cost of revenue, reconciled depreciation, normalized EBITDA. I mean, that's not terrible. It's not what it was a year before, but compared to the year before and the year before, it's still higher. Didn't have any unusual items. And then if we look at the balance sheet, this is just more our assets and liabilities. So from this standpoint, total assets keep increasing. Liabilities, and remember, these balance out. These should always equal capitalization, common stock equity, tangible assets, working capital, invested capital, tangible book value, total debt, shares, and ordinary shares. Now, the big one is the cash flow statement. So see here. Okay, we're slow in the comments. All right, so operating cash flow from 2020 to 21, we had a big increase, but slower increase in 22. We actually dropped in 2023 in terms of operating cash flow. Investing cash flow looks very concerning, actually. So if we drill down on this one, what we're going to see, cash flow from continuing, it's like abbreviated, continuing like operations or something. Net PPP, property, plant, equipment, purchase and sale. Net intangibles purchase, a zero, a big fat zero. Net business purchase, net investment purchase. Okay, so we're kind of bleeding cash flow from the investing side. From the operating side, continuing operations, net income here, operating gains, losses, depreciation, amortization, deferred taxes. They got hit on deferred taxes. Asset impairment, stock-based compensation. So that's what you've got there. And then for financing cash flow, we actually, after a couple of years in the red, we came into the black on this one. So let's drill down and see. Net issuance payments here, common stock issuance, proceeds from stock option exercised. Net issuance payments of debt. Net other financing charges was negative. End cash position. So you see every year we were getting lower. We were slightly higher in 2023. Capital expenditure, issuance of capital stock, issuance of debt, repayment of debt. The free cash flow, so the bottom line here, we increased from 21 up and above 2020, increased substantially in 2022, but 2023 we really fell off in terms of free cash flow. We're still positive, but we've fallen off. So, I mean, it's not horrible, but we probably still have room to drop. And of course, whatever the underlying does, our favorite high yielding ETF, TSLA, is going to be significantly dependent on that. So if we go in and look at TSLA, of course, there's not really any fundamentals to look at on this one. This is just, basically you've got the synthetic positions. It doesn't actually hold any shares of the underlying. So we dropped yet again today. I actually stopped looking, but we dropped to 878. So some of you all out there may be scooping these up, because I mean, we're down, like, this has fallen in half since July 10th. So we're below $9. This has to be, we're very close to the 52-week low. So, but this is heavily dependent on what the underlying does, obviously. So the interview that I reacted to with Jay when he went on the Passive Income channel, that was actually a really good interview. He talked about reverse splits and all of that. He talked about inverse ETFs and so on and so forth. As far as whether or not this is a good buy, I haven't really come up with a definitive, conclusive answer. I mean, if you base the fair value of Tesla stock on, say, like 120, then it's still got room to drop. But like I said, with the Fed not cutting interest rates, it's going to be some time, I think, before we start to see this one run back up. So let's see. How about this? If you actually just Google discounted cash flow value of one share of Tesla stock, is $83.70 US. So that still suggests it's like overvalued by over 50%, actually 55% compared to the current market price. The stock would be overvalued by over 50%. Let me share this with you all, because we don't typically go into this much detail. I'm going to go to this site called Alpha Spread. And yeah, actually, so Varden's pointing out here what I'm saying. 120 could actually be too high, according to this next cash flow analysis that we look at. He has to give it another 4 to 6 months, more info. Yeah, that's with the interest rates and stuff. Oh, look who's on, Sonia, one of my favorites. I think the market overall wants rate cuts, and if it weren't for the negativity by Papa Powell and gang towards cutting, the Russell's continuing its fall, more continuing fed up market act out. I'm going in reverse order here. Interest rates, they said today, won't go down until June or July. We'll see. Oh, look at this here. This guy, Bill Betts, he says, probably fell asleep. No, I'd never go to bed that early. You know better than that. Vartan's reminding me of old times here when, when back probably like a year ago, I would show up late to live streams that I scheduled, and that was kind of like the joke, the running joke. Let's see. Still don't know what I think about Tesla or even EVs in general. I know I don't own one. I've driven one. It's missed a lot too. Now, here's what we're going to do. This will really throw you off for a loop here. We're going to look at some actual DCF analysis here. Because like I said, I've seen around like 120 or so, but it's actually probably lower according to this one that we're going to look at. So here we go. We're going to go to this site called Alpha Spread. Okay, so discounted cash flow value. This model was actually created by Alpha Spread, last updated today. Estimated DCF value of one share of Tesla stock, 83.20, compared to the current price. So this is pretty cool. Even if you don't know how to do cash flow analysis, you can just plug it in here and it'll do it for you. It's overvalued by 54%. I'm already liking this site a lot. So we've got worst case, suggests a 79% overvaluation. Base case suggests a 54% overvaluation, and then the best case suggests an 8% undervaluation. So even the best case, even if we skew it, it still suggests it could only be as high as 197. So we may not exactly be at our best buying point, or the fundamentals have to catch up to our price. So this is showing here present value calculation. This block is the starting point of the DCF valuation process. Calculates present value of company's forecast cash flows. That's exactly right. Present value of future cash flows. That's what they teach you in finance class. That's what you do on this calculator. Or if you're really good, in El Noggin here. Present value of cash flows over the next 5 years amounts to 114 billion US dollars. The present value of the terminal value is 514 billion US dollars. The total present value equals 627 billion. So that suggests a higher like enterprise value. So I don't want to get into like finance class or corporate finance 101, but there's a difference between enterprise value and market cap. And there's also a difference between enterprise rent a car and the other two that I just mentioned. So for those of you not in the know, that third one was a little bit of a joke. Let's see, operating model forecast period. I like this. So assuming a discount rate of 8.82 and a terminal growth rate. These are assumptions made here. I don't want to bore you all with this, but this is what we're suggesting here. Terminal cash flow. And let's see. So if you break this down, present value, equity value, and this is simple, right? The total present value divided into number of shares would yield you, best case scenario, $197.33 stock price. Now you don't hear all this on YouTube too often, so hopefully this shows an important perspective that's not often talked about on here. Sensitivity analysis. Let's see here. So this is going to be based on revenue growth. These numbers here, like if revenue growth ends up being these percentages, then the intrinsic value of the stock could be this high. I need to use this site more often. This makes my coaching job really easy, actually. Revenue, net income. I like this one. So there you go. So without going into too much detail, we're still looking at a stock that's most likely overvalued. So there you have it. All right, let's look at some comments here. Let's see, we got howdy ho, howdy. Let's see, $60 less overall stock gets it to flirt just above $5 or $6. That's kind of scary. Hi, all of you, eagerly awaiting a glimpse of the Yield Max. Yeah, oh, we're going to be covering that on here for sure. This will be your source for the Yield Max news, right? What's your guess? He's saying 38 cents. Let's find out. So I don't know what the dividend is going to be, but thankfully I'm equipped with advanced financial forecasting equipment, such as the 8 ball, which helps me in key decisions, not just financially or investment wise, but in life in general. It's quite in handy. So let's see, is Varden right? Will it be 38 cents? Let's see. My reply is no. Oh, I didn't know 8 ball was an individual. It says my reply. Okay, I do it again. It says signs point to yes. So we've got like 50% yes, 50% no. So it'll be somewhere there in between 0 and infinity. It'll be somewhere within that range for sure. I'm thinking it's going to be lower than 50 cents or 50 cent, maybe 40 cents. I've been more worried about the others. Oh yeah, we're going to find out. Like I said, I'm officially an investor in SQY and Coney, so we'll find out what the other ones do for sure. But hopefully, I mean, it was kind of a rocky January for those funds. It won't be 60 cents, but I'm hoping at least that Coney and SQY are higher, than what we're thinking. Anyway, all right. Well, we will find out very soon. Actually, we're going to find out probably by the morning. I may just try to crank out an early morning live stream for you all, so keep an eye out for that. In the meantime, like, comment, and subscribe if you haven't already, and we will see you all very soon. Thank you all for tuning in. Take care. Have a great evening.